Okay, here we are, finally, the final chapter. I know you're excited about this because the course is now coming to an end. We're going to look at Chapter 14, the fundamentals of controlling. So let's look at the objectives for Chapter 14. We want to look at the various management control functions. We're going to look at 3 types of control mechanisms, examine the essential steps in the control process, and let's take a look at the supervisor's role in controlling through budgets. So, management role in controlling. First of all, controlling is the act of ensuring actual performance is what the intended performance was, and if it's not, taking some kind of corrective action, if needed, to bring it back on track. Remember, management goals are plan, organize, lead, and control. Those are the 4 main management functions. Your author says a 5th one, staffing. Yeah, okay, but if you look at any management text, it's still POLC, planning, organize, lead, and control. So controlling is most closely related to planning. It continues onward with other managerial functions. You're constantly going back, planning, and organizing again. So controlling is not final. It always takes you back to the other steps. Employee responses to controlling, not always a positive thing, and you have to be very careful about it. Most employees view your controlling negatively since the amount of control you exercise kind of determines how much freedom they have to do their job. Designed properly, though, you can have a very positive influence on employee motivation and their behavior. So you're controlling in a proper and popular method. The goal is to design and apply controls that are happy to your employees, but properly monitor performance and accepted without any resentment. All right, so moving on, control should be forward-looking. What does that mean? Well, number one, you can't change the past, so don't dwell on it. You can learn from it, and you can make adjustments that going forward you do something different, but you can't change what happened. So the main purpose is to identify any deviations, take some corrective action, and move on. Do not look to assign blame. Controls need to be aligned with the strategy of the company. Where is the company wanting to go with this, and what is your job in obtaining that goal? Time-factored control mechanisms. Well, we have what's called feed-forward control. This is your anticipatory action or preventive measures taken to ensure that problems don't occur. Now, what I'm going to tell you is you have to presuppose that there's always going to be a problem, there's always going to be resistance, from who, how, or what, and then plan to avoid it or minimize it. Concurrent control is taking corrective action during the production or delivery process to ensure that standards are being met, like quality, production, efficiency, and so forth. Feedback after the process control is that action taken after the activity, product, or services have been completed. So you kind of look back and go, all right, what went well? What could have went better? What should I have done? What could I have done to make things go smoother next time? Always review in your mind. All right? Now, there are characteristics of effective control. You need to be flexible. Your controls need to be understandable. Your objectives need to be understandable. They need to be timely. They need to be indicative of what the company's trying to attain and what the objectives are. And, of course, they have to be suitable and economical so that you meet budget or stay within guidelines, right? So the steps in the control process are setting standards. Standards are those units of measure or criteria against which results are evaluated. And there are tangible standards, standards for performance that are identifiable and measured. For instance, like quality of outputs, quantity of outputs, production quotas, number of defects, productivity, anything that you can put a number to. Intangible standards are standards for performance that are difficult to measure and often relate to human characteristics like attitude, morale, and things where it has to deal with the behavior of your employees. So some of the steps of setting standards are taken time and motion studies. A motion study is an analysis of those work activities to identify ways or best practices, best methods, so that you can improve, eliminate, change, or combine steps to make the job easier, faster, and hence more productive. Time study is a quantitative technique for analyzing a job to determine time standards for performing the job, how long it should take somebody to perform a certain task. So you select your employees for observation, and you have to kind of use a good rule of thumb here. You don't want to use your absolutely best, most experienced worker because they have years of experience and know all the shortcuts. But you don't want to measure the beginning employee who's only been there for 3 weeks because they're stumbling still to learn. So you want to take kind of maybe one of each and one in the middle, or just look at the middle. So you observe the times needed to accomplish certain parts of the job. You analyze and apply some correction factors. You have to take into consideration allowances for fatigue, meaning that in the morning they're fresh and they're really active, and towards the end of the day they're getting tired and they're not going to be as productive. So you have to take those things into consideration. Also, you have to look at their personal needs. Do they have to go to the bathroom, stop and get a drink of water, wipe the sweat off their brow, etc.? You can't count those in. And you don't time in the unavoidable delays like a machine breaking down or needed to be restocked. Labor standards come in a lot of different ways. Effective manpower planning is dependent on a knowledge of the labor required. Labor standards are the amount of time it takes to perform or do that task in the job. And accurate labor standards help determine your labor requirements, costs, and fair work for employees, so that when you're designing a job, you look at it and you go, this should take 3 people 35 minutes to produce one part without really killing themselves to do so, but at the same time without slacking. So there has to be some method to analyze the amount of work that should be able to be produced in a certain day so that you meet your customer's demand. And determining these labor standards is very important so that you can determine your staffing requirements. So, meaningful to standards help you determine as a manager whether people are doing what they should be doing and what they can be doing. Helps you look at the labor content of items produced, helps you determine your staffing needs, helps you determine your cost and time estimates, what your crew size and work balance should be, the expected production, and the basis of any maybe wage incentive plans, and also mainly important for what you're being evaluated as a manager is their efficiency and productivity. Could be set in 4 ways. Your author gives you a couple. I'm giving you 4. Number 1, they could be done by historical experience, meaning that based on certain jobs that have been done already previously or similar, it should take X amount of time. There is the time study method. There's also the predetermined time standards. Predetermined time standards are like when you go to the mechanic and you want to have a complete muffler job done. They tell you what the labor is going to cost you because based on a certain amount of time from predetermined time standards, they know that it's going to take X amount of time to remove the muffler and the tailpipe and reinstall new ones. And then there's also a method I'm going to introduce you to called work sampling. Work sampling is estimating the percent of time a worker spends on various tasks. It requires random observations to record worker activities, so you can't just do one. You randomly select employees and you look at what they do and what they're doing and so forth. And it kind of determines how employees allocate their time throughout the day. It can be used to set staffing levels, reassign duties, estimate costs, and set delay allowances. So work sampling might be like, for instance, on a salesperson. You look at how much of their time is spent doing each of the activities. So in the example I have here, a salesperson does sales in person, face-to-face, 20% of their day. They may travel 20% of their day. They're doing 17% of their day is filling out paperwork. 10% gives them lunch and personal break time. 8% might be meetings and other items. 13% might be being on the telephone inside the facility, and 12% might be cold telephone sales calls. So you take a pie chart and you kind of break it into segments of how much time they spend doing each activity. So you check their performance against standards. You look at a personal observation, you take oral and written reports, you do spot checks, and you do various sampling techniques. In taking corrective action, you do that when deviations from the standards occur because standards were based on maybe faulty forecasts or bad assumptions, or maybe unforeseen problems arose and you had distorted results. It could be because failure occurred in some preceding job or activity prior to you doing a time study on the one person. The employee who performed the job might be unqualified or underqualified or given inadequate directions and training. Or the employee who performed the job was negligent or failed to follow the proper procedures or directions. So you can't use any of those situations to consider it to be a standard, right? Before taking corrective action, the supervisor needs to, first of all, determine the cause of the deviation. Was it something wrong with the standard? Was it something wrong with the employees? Decide which remedial actions will obtain better results. So in other words, you want to make sure you're doing a fair evaluation without any external or extraordinary circumstances that might cloud your perception and measurement. Budgets. Budgets are a financial plan that projects your expected revenues, money coming in, and the expenditures that you're going to have going during a particular time period. Budgetary control is the use of budgets by supervisors, accountants, and higher level management to control operations so they comply with the organizational standards for making budgets. And let's face it, the idea is to make money. So we have to make a profit, therefore we have to make sure that our costs and revenues all make sense to where a profit is being attained. So each department gets an operating budget, which is an assignment of allocations to the cost and expenses needed to run the business, based all upon the expected revenues for that business and each department. Supervisors need to have some kind of input into that budget making. So there's incremental budgeting, a technique for projecting revenues expenses based on history. There's zero-based budgeting, the process of assessing on a benefit and cost basis all activities so as to justify the existence of them. And then the departmental expense budget, a budget that covers the expenditures occurred by that department based on history and needs prior to the current time period. Supervisors have to manage their departments within the budget limits they're given and refer to the budgets to monitor their expenditures during a certain operating period, generally quarterly. Now, being a new manager, a new supervisor, let me give you a tip. You are given a budget. Do not try to make a hero out of yourself. Do not go, okay, well, my budget is $60,000 this quarter. I'm going to try and keep it down as much as possible. If you cut corners and try to make that budget come in under the budgeted amount because you want to be a hero, because you want a promotion, what's going to happen is you'll be successful, all right, but what's going to happen then is next year your budget is going to be cut to the amount that you spent. If you only spend $50,000, next year your budget's going to be $50,000, and next year you might need some things. You might need to, you may be saying in the back of your mind, all right, well, I'm going to cut it thin this year, but next year I'll get some extra employee training and I'll get some extra equipment, da-da-da-da-da. The problem is, if you have a budget, spend it, but spend it wisely. Get your people the training they need, get the extra equipment you need, because if you cut it below the budget, next year your budget will be cut. If the expenditures for an item greatly exceed your budget amount, you need to find out what happened and justify it. A supervisor's budget should not be so detailed and rigidly applied that it becomes a major burden to you. And again, if you try to make a hero for yourself and make a name for yourself and keep the budget tight, next year you're going to have no breathing room. Some other control areas: specialized grounds, inventory control. This is keeping watch over your raw material supplies, work in process items, finished goods, and so forth. And it's maintaining, though not excessive, inventory control, keeping status records of all inventory, ordering economic lot sizes, and many other tasks. And then of primary, let's just say, major emphasis is quality control. Maintaining quality standards a firm sets for its products and services by monitoring and doing continuous improvement to ensure that your quality is maintained to satisfy your customers. Production control. This is keeping track of the activities that are designed to keep your overall operations on schedule and meet your production demands. Excuse me. It involves routing operations, scheduling, and when necessary, expediting workflow. Best tools used are Gantt charts, which is a diagram or pictorial representation of the progress and status of various jobs in production. And then there are project management tools such as PERT and CPM. CPM is the industry standard, which is called the critical path method. So if you're a project manager, you want to use one of those two tools. So controlling the other managerial functions, again, remember it all goes back to what you do as a manager. Planning, organizing, leading, and controlling. Staffing, yes, but that's pretty much an HR job. You do have input on who gets hired and comes aboard, but your primary function is not to make sure you have the right staff. Yours is to plan, organize, lead, and control. Despite what this textbook tells you, I'm telling you what the real world management jobs are. So, ladies and gentlemen, we have now completed the final chapter. We've come full circle on planning, organizing, leading, and controlling. So I hope everyone is well, and sad but true, I'm going to miss having you all as students, but I know the whole objective was to complete this course. Any questions, drop me an email. Take care.